a lot of you guys know my trading model because I trade with it live every single day and I've been doing so for a very long time. But not a lot of you know my exact trading system, which includes everything that you see on this screen right now, from the day before I start trading to after trading and everything in between. Now, it's very important to have this written out so you understand your rules, your risk management, your money management, and it's also important to organize it because it needs to be there for your taking, I guess you can say. When everything is nice and organized in some sort of manner, or if it's written down, you know exactly what to do, when to do it, and you don't have to make as many decisions on the fly, which is something you want to avoid doing because you don't want to make mistakes. Now, I don't want to waste any time. You guys know I don't like to waste time with any of these videos. We get straight to the point. But there is one thing I have to say. I highly recommend you to not simply just copy my system. And let me tell you why. Do not skip this part of the video because it's probably the most important part. This is very, very specifically tailored to my experiences in the marketplace, which have come from reflection and every single day showing up, knowing my strengths and weaknesses. So how much I risk, how I trade, when I trade, how many trades I allow myself to take, the Confluences I look for, the way I outline all my trades, my entries, everything is tailored to me. And it's also subject to change as I gain more experience in the market. Now, the actual model itself, that's probably not going to change. Maybe little tweaks here and there just to, maybe improve the probability or some sort of aspect like that. But the actual system is subject to change at any point, depending on where I am in my journey, my experiences, any strengths I may have or weaknesses I want to exploit and take advantage of, knowing that information. Without further ado, let's get started. Now, I'm not going to waste any time. I will also say that this isn't about me teaching. I'm not going to be teaching anything in this video. I'm just more so going to be going over my model, my trading system. So I'm going to make myself super tiny here, put myself in I like the bottom right corner. I'm not moving all over the place, but okay, very simple. The first part of any trading system is your before trading routine. Before even trading, what needs to happen? 1, I need 7 hours of sleep or more. Some of you are going to say that's weak. I don't care. When I have no sleep, I am very grumpy. I'm hungry. I'm distorted. My mind is fuzzy. I usually just go back to sleep. So for me, minimum of 7 hours. Ideally, I'm very consistent with my routine. I sleep for 8 hours, 12:30 to 8:30, and that's usually my time window. Criteria 2, I don't want to trade on my phone ever again. I've never had a good experience. My computer and internet must be functional. Criteria 3, I got to be at my computer before 9:30 a.m. Eastern time. If I'm late to the session, at best I just don't do it. This has only happened once or twice. I was late, and I just think it's better to be on time. It also gives you some sort of consistency. If you want to take the time to read this is my exact kind of thing. Basically, I do the same thing every morning. I wake up at either 8:30 or 8:45, depending on when I slept, trying to maximize my sleep. Yes, that 15 minutes makes a difference for me. I don't care what anyone says. I wash my face with cold water. I wash my hair a little bit because I'm going on live stream and I don't want to look like I just woke up. I get a small breakfast and a cup of water. That way I don't have to leave while I'm trading and I can stay. I don't want to be hungry while I'm trading. That's a distraction. And then I open the live stream and I start doing my stuff. So that's my morning routine. I've been doing that for like a year. It's important to have one because it builds consistency. Rules, very simple. No trading on these 4 days. Day before non-farm payroll, the morning of FOMC, prior to Fed chair speak. If there's a Fed chair speaking, I don't want to trade until during or after. Usually I wait for it to settle down and I don't trade bank holidays. This is something, it's not a written rule, but it is something I look to do to protect myself. Implementing a safety measures protocol. No news Monday. Day before CPI or FOMC. If the weekly objective has been met, if there's expansion in pre-market or London session, if there's high resistance liquidity run signatures, meaning lots of wicking or back and forth, lack of imbalances, if order flow is neutral, or if we're range bound, I'm looking to implement my safety measures protocol. Now if as a trader, you can just say, I don't want to trade. The reason I don't want to do that is because sometimes we get a lot of this. And there's still setups to be offered that can offer 1R or 2R or at least a break-even trade that could potentially run. And I think it's worth taking it because in the long run, they add up. The goal of this day is not to hit a home run. It is not to catch the entire move towards my drawn liquidity. The goal of this day is to, for one, survival, But really, I'm just trying to get a base hit. If we can get a 1R, a 1.5, or 2R trade on a day like this, I'm very content with myself. How do I manage trading on days like this? My stop loss placement goes to the protected lower high. Okay, it's got to be covering of those high resistance signatures. SL placements break even as soon as I can, pretty much. Not as soon as it forms, but like as soon as it makes sense, even if it just makes sense a little bit. Or I'm just trying to protect myself. No scaling into positions. Zero scaling into positions. Very low hanging fruit, 1R or 2R fixed target. I won't aim for anything more than 2. I don't care if it's the most obvious drawn liquidity. If it's above 2, no. Just take it off between 1 and 2R. This is a protocol I have in place to protect me from days where my model's edge isn't capturing the daily range, or 930 is not as strong, but still can be viable. Now, let's get into the good stuff. We're talking about the daily outlook. This is where we actually start doing stuff that, I guess for most of you guys, matters, I guess you can say. Every single day, I make a pre-market plan. What does that look like? It can be broken down into 3 things. The economic calendar, which will tell me what can I expect in the week and or the day. Daily bias, and if not daily bias, intraday bias. So you can go ahead and read all this, but it's basically just telling you, I look at first the economic calendar. This will tell me if I'm expecting expansion today or a high volatility day, or if I'm expecting contraction, smaller daily candle with low volatility. That's what the economic calendar does. So for example, a day like this, expect more. Day like this, expect less. After we get past the economic calendar, we go on to daily bias. Now remember, the plan here with the daily outlook, this is before market open. The plan, I do this at 9:15 a.m. Eastern time. It only takes me a couple minutes. The plan here is to literally write down a plan of what I'm potentially expecting going into market open. This can change. This is not going to be every single time follow the plan. No, the plan can change. It's simply what do I see visually that I think can happen. So this is where I'm marking out key levels and such. So charting. What do I chart at 9:15 a.m.? Now sometimes I do it before if I'm available, but usually it's 9:15 a.m. Any key monthly, weekly, or daily levels that are in reach. Notice I haven't even talked about bias. If the level looks like it's potentially in play, I'll mark it up on my chart. Any drawn liquidity I may have, or levels I anticipate my model's forming at. This is subjective. This is objective, meaning every day I mark this out. First presentation fair value gap, the opening range quadrants, Asian range standard deviations, midnight opening price, New York kills on opening price, and New York opening price. So midnight open, 8:30 a.m. Eastern time, 9:30 a.m. Eastern time. Every single day, I mark these levels. They're very key to me. It's the same levels every single time. Next, once I look at the economic calendar, it's time to start looking for a potential daily bias. The most important part about daily bias is accepting that you do not need to have one every single day. That is not the goal. The goal is when it's so blatantly clear that the next day is going to be bullish or bearish, that is the day you need to have a daily bias, because any trades in that direction are significantly more higher probability. So don't come in every single day and say, I'm bullish today. If I go long, I'm aligning with my bias. It's not going to be clear every single day. But there are some days, and I'll show you an example, because this is a very important part. If you happen to be trading with your daily bias and you have a really high probability daily bias, beautiful probabilities on the trade. So, Gatie, how do you get daily bias? 3 things. Cannot be more simple than this. Drawn liquidity on the daily chart. I'm looking at this. Previous day's highs and lows, previous week's highs and lows, previous month highs and lows, previous quarter highs and lows, imbalances and gaps on the daily chart that are in reach. Simply in reach, meaning in the daily range, it's possible we get there, or in the weekly range, I should say. And then this is for drawn liquidity. Step 2, order flow. This is primarily, if order flow is bullish, I'm going to be bullish. The key here is to know if order flow is currently bullish or bearish. This is what bullish order flow looks like. This is what bearish order flow looks like. This is what neutral order flow looks like. Finally, to confirm the order flow idea and confirm the highest probability daily bias, I use the weekly power of 3. If we have a bullish drawn liquidity, we have daily order flow that's bullish, and the weekly power of 3 tells me that this day is likely to expand higher. You have a beautiful high probability day, and it's going to be very clean to find a nice long. and this is what weekly power of 3. So you can go ahead and read everything you need to. Like I said, this is not about teaching. This is about getting to the point. So let me give you the best example of daily bias using these 3 steps. Draw on liquidity, monthly high. Is it in reach? Sure is. It's right there. We also have previous week's high, which is right here. Look at my cursor. So we're not bullish until this day prints. So look at my cursor. Look very closely. We're outlining the bias of this candle, right? We're trying to say that, okay, after seeing this move down, we see that rejection from this level, and we have bullish order flow. We have a drawn liquidity, and this is a Wednesday low. This is a low right here, Wednesday. So we have a weekly power of 3 idea, manipulation below. This day is so high probability to be bullish. Very high probability. These are the reasons. So this gives us a high probability bullish bias for the Thursday, which is this. We look for longs on Thursday. Very simple. Daily order flow is bullish. We're disrespecting premium, this inversion fair value gap, and this wick, and we're respecting discount, this bullish fair value gap. Daily order flow is bullish. We have a drawn liquidity, the weekly power of 3. We have manipulation below with weekly open. Very high probability long on this Thursday. And that's it. That's what you're looking for. Now for the bearish side, drawn liquidity. We have low of week, which is right here. So a previous day low and previous quarterly low. Clear bearish order flow. Daily bullish FEG, we're inversing this and we're respecting the bearish one. That's clear bearish order flow. There's also a breaker in here. Weekly power of 3. Notice how we open on the week, we trade higher and then reject. Now notice my cursor. I'm not bearish on this day. Now you can frame shorts here. It's the next day that's really clear. The next day is likely to trade lower. And then as soon as you see this trade very much lower, you know the next day is also going to be high probability bearish bias because of the displacement towards the drawn liquidity. So everything is aligning for the next day. This is also a Wednesday high, so the weekly power of 3 makes sense. So see how I'm not trying to paint every single day. This is not clear. Maybe you can be bullish on this day to target this imbalance, but this right here, this day and this day are your highest probability daily bias. Those are the days I'm looking for when I look for daily bias. What if I don't have a daily bias? No problem. You don't have to trade with a daily bias every single day. That's what intraday bias is for. This is where I look for levels like relative equal highs or lows. Imbalances intraday. New day opening gap, new week opening gap, opening range gap. Session highs and lows. Very key liquidity level. Session highs and lows. So same idea, just sizing it down towards, let's say, a 15-minute chart where you can see these levels very visually. Same concepts. Drawn liquidity, intraday order flow. So not daily order flow like in daily bias. Intraday order flow. Same exact concept. Instead of weekly power of 3, we're looking at the daily power of 3. Very simple idea. Everything from the higher time frame scale down to the intraday. I'm using the exact same concepts. Drawn liquidity, order flow, power of 3. That's it. Nothing else. I don't care about anything else. Keeping it as simple as possible for me. I like reading the order flow as I'm really good at looking at those signatures in price. And power of 3 is my model. So when I align with it anyways, it's very, very nice. So, example, Asia session accumulation. We have manipulation below midnight opening price and a bullish bias going into 9:30 open. -2 standard deviations of Asian range. Manipulation below midnight open. CISD going into market open confirms the reversal. This low is protected. We have relative equal highs, previous London highs, and we have Asia highs. High probability long on this day. So high probability intraday bullish bias. And I realize I'm blocking that so you can see it right there. This is an example. Here, drawn liquidity, we have morning session low. We trade into a premium CIVI, we respect it, and we disrespect discount. So instead of this being an order block, we get the inversion level there. So we get the CISD on the 30-minute. It's a power of 3 with the 14. So this is an afternoon example. Asia session, manipulation above midnight open. So again, intraday, those 3 things. Drawn liquidity, order flow, power of 3. If those align, I'm looking for the high probability short. So this is a high probability intraday bearish bias for PM session. This is an example for AN. Very simple. 3 things, right? All right, we've gotten past the daily outlook. That was all outlook on the day, not trading or anything. Now that we have our bias, bullish on the daily, or on intraday, right? So either it's daily bias or intraday bias. If I don't have an intraday bias, I cannot trade with high probability. So if I don't have a direction, there is no trading. I will sit there and wait for it to show me. So let's assume we have that now. We're on part 4 of the system, my trading model. You guys know my trading model because I have a full series on YouTube about it. It's the power of 3. I trade, listen closely, right? When someone asks you what's your model, you need to have an answer. The answer is right, I'm about to tell you right now. I am trading the range expansion of the higher time frame candle open, the daily candle, and the 9:30 4-hour regular trading hours candle. These are the two I'm primarily trading, right? If the daily candle's already exhausted its range, then we're focusing on intraday stuff, right? So I always trade after 9:30 open. Now, the model itself looks to capture the range of the 9:30 candle, but I frame my trades around New York opening price, midnight opening price, and you can also, in that 4-hour 9:30 candle, look at the smaller power of 3s or the smaller candle opens inside that window, for example, 10 a.m., 10:30, 11 a.m., etc., etc. Even if you really want to be perfect with your entries, you can even look at the 15-minute starting at 9:45, 10, 10:15. Those candles have sometimes a really nice range. The model itself composes of 3 setups. Now, I view it as one model, but a lot of you guys will say it's 3, and that's okay. The classic setup. This is your classic AMD, right? If you have a drawn liquidity lower, accumulation, you manipulate higher, looking for that short. Reversal setup. This is what I call a higher time frame candle flip, meaning if I'm bullish on the day and we're below opening price, I'm looking for a reversal. And then protraction setup, higher time frame candle range expansion, trading the continuation. So if I'm bullish on the day, we're already above opening price, I'm looking for retracement and continuation. Very simple. These models allow me to capture pretty much any idea in the power of 3 range expansion, and it's my edge in the market. You know, I really like it, and simple. You know, this is your classic model. I'm not gonna sit here and break down the models because I've already done so on my YouTube very much. This is when I look for it. This is what it looks like, and very simple. This is the reversal model. This is when I look for it. This is when it's likely to form. Yeah, very simple. And model number 3, protraction. This is what it looks like. This is when it's likely to form. This is the criteria. So again, the criteria is there for every single one. And very simple, right? Very simple. Now, let's talk about entries. A lot of people confuse this with my model. They say, this is not your model. Listen very closely. The only thing I care about for entries is risk to reward. That is the only thing. Risk to reward and conviction, right? So when the model forms, let's say we get all these 5 criteria for the model, or let's say these 4 criteria. It's time for me to enter. Now, if the risk to reward is good and I'm convinced in the model, I can buy or sell, market order. I don't need no retest. I don't wait for retests ever. The only time I wait is if I'm looking for a better risk to reward entry, meaning the market just moved way too aggressive when it formed my model, and I don't want to take it at the level it's at. I wanted to, you know, ideally trade in my favor. So if you want to go ahead and read this, you'll get the insights, but I never wait for a retest. Most of the time, it's very simple. On a reversal model, I'll enter off a CISD or a breaker formation, market order. If the risk to reward is good and I'm convinced, protraction model, I enter off the OB or inversion if the risk to reward is good. Now, we're going to talk about scaling in and adding positions. This is what a lot of my edge comes in, okay? Most of my models intraday don't offer that much risk to reward. Now, sometimes they do if it aligns with the daily power of 3. So sometimes, you know, you don't get the biggest intraday expansion, but when it aligns with the daily power of 3 or the weekly power of 3, usually this is once a week, maybe, when you just get that one setup that really can go. Great time, great risk reward setup, my model can capture it. But most of the time, it's hard to align the weekly and daily power 3 on an intraday setup in New York session. You're demanding a lot here, right? Because you're not trading the London low, and it's that kind of idea. But, so what can I do? Now, I look to scale into my positions, and we're going to talk about that shortly after this. Confluences for my model. Very simple. This are a list of confluences I look for. Double purge setup, meaning before the model forms, we engineer liquidity and see the run on opposing liquidity. Speed and displacement, very important. If the model takes forever to form with lack of displacement and speed, it's lower probability. SMT divergence and intermarket correlation. Meaning if one asset puts in the SMT, for example, it's higher probability. But intermarket correlation is also important. If one asset doesn't look like it's ready to go, that's a red flag, right? Ideally, both assets are forming the model. Key liquidity level. This always improves it. This is key liquidity. Session highs, previous day's highs, weeks, months, etc. Key imbalance level. So if any of these levels are in play with my model, whether they're a target or whether they're being used as a confluence, being respected, the model is high probability. Asian range standard deviations. Looking at those standard deviation levels for targets and or reversal levels. And then if we're in discount or premium of the range, that's really good. There is no specific grading system. However, these are things I look for every single day to add confluences and conviction, right? For example, my model can form, but let's say there's no speed and displacement. I might not be so convinced that this is actually correct or it's time for the market to expand. So I might opt out to trade it. The model formed, but I'm not going to take my trade every single time my model forms. That's not how I trade, right? So that's the idea. Okay, let's talk about stop loss and take profits. Stop loss placement. The true safe level for every single trade I take. For a reversal model, it's the swing high or low that's protected. For the protraction model, it's the retracement high or low, the swing level that's protected. It's the actual wick. I don't often put my stop loss at that wick because in a good trade setup with a good low resistant market condition, we don't even trade to even like 50% of the way there from my entry. So it doesn't make sense for me to always put my stop loss at the wick, high or low, and sacrifice all that risk to reward if most of the time we don't get there. So what do? I keep a general rule of thumb that my stop loss must cover the inverse of the PD rate I'm entering off of. That is my definitive level. But depending on the displacement and the range I'm working with, I may adjust my stop loss based on my personal ability to reprice and think of a definitive level I don't want to see price to trade to. So I leave this kind of subjective. Now I know the true level that it needs to be at, but I'm trying to take advantage of my ability to understand the speed in which price can deliver, the order flow, the condition of the marketplace. Is it high resistance or low resistance liquidity conditions? And I take advantage of my ability to read that and I place my stop accordingly, right? That's how I like to do it. Take profits. And then this is the general rule of thumb. So reversal model covers the CFTC breaker, protraction covers the OB IVD. I mean, for the most part, it's going to be like this. Anyways, TP placement. The first thing here to discover is the definitive minimum that I expect. My reversal model completes itself at -2 standard deviations of the 1 minute manipulation leg. If we reach -2, I cannot demand more from my model. It is complete in my mind. It can go more. I'm not saying close the model at 2, but if it reaches 2, in my mind, the minimum has been hit, right? Protraction model, -1, and 1 retracement leg. Now, there are times where the manipulation is really large, and all I would expect is a -1, but that's more of something I'm more subjective to, and it's not more of a definitive rule. I'm not saying take profits at this level, well, not yet, but I'm saying those are the minimums that I look for in my model. This is something I use to outline a definitive level that is not subjective. This is important to have because this is what I can expect from my model to consider itself played out. Aside from this, I implement a partial taking strategy with my model to help me reduce risk, make my winners bigger than my losses, and remember, I'm also scaling in. So, taking partials. Every trade has a draw on liquidity for my model. It's step 1 of every single model. But it does not need to be met for me to be valid or winning trades. Sometimes I have the wrong idea, yet I can end up winning. The reason of this is very simple. We're trading on the 1 minute chart. I simply can't enter, put my stop at the daily low and hold it towards my drawn liquidity on the higher time frame because I'm not trying to hold for hours or days. I mean, hours is fine, but days is not what I'm trying to do. I can't hold it overnight. So there's no telling when we're going to reach my drawn liquidity, especially if it's a higher time frame objective, right? If it's right there, relative equal highs or session highs or lows, intraday bias, trade idea, great. We can probably hold a runner. But sometimes it's higher time frame. It's at some sort of daily level. And I'm not looking to hold my trade there because I may get stopped out before it gets there, simply just because of the volatility in the marketplace, right? There's no guarantee that the setup I took, because my model can form multiple times, there's no guarantee that the one that I took is going to deliver straight to my higher time frame objective. So I must take partials. If I wanted to trade on the 15-minute chart and capture the daily range, it's a different story. But that's not what I'm trying to do, especially not with prop firms, right? Because you don't want to be taking one trade a week with prop firms, for example. It just doesn't make sense. Now, Every trade has a drawn liquidity. These are the partials I'm looking to take at. Opposing PD arrays. So if I'm entering discount, I'm looking at premium arrays. This protects me in case I'm wrong. So highs and lows and balances, nothing else. PO3 projection levels. So again, I talked about those standard deviations. PO3 opening price. So I will always target 9:30 or midnight opening price as a partial in a reversal model, right? It doesn't make sense to do so in a protraction because you're above those or below those respective. Engineered liquidity, meaning when we retrace and I'm entering long, I partial at that engineered liquidity level before the retracement. Again, only valid for a protraction model. I can partial at my drawn liquidity and my higher time frame objective. Those are the levels I look to take partials at. Risk management. Did I talk about scaling? Okay, we didn't. Oh, right here. So we didn't talk about scaling. Very simple scaling rule that I look to implement. So we talked about entries. Oh, we didn't even talk about entries is next. Did I skip this? I think we may have skipped this. No, we didn't skip this, but let's go over a scaling into positions. So the way I scale into positions is very simple. If my protraction model forms, I bump my stop to the protraction model low and I add positions. I can add as much as I want, subjective, as long as I'm not going above my maximum risk, which we're going to talk about shortly. So very simple rule there, right? It's not ambiguous. It's not, oh, but when do I add? If the protraction model forms, I add positions. If I think there's still room for the trade to play out. And if that plays out, I can add and bump my stop. I only scale in if I'm reducing my original risk. Let's talk about risk. So this is honestly my probably biggest edge in the marketplace, maybe besides the ability to read order flow and gauge price and bias, I guess, drawn liquidity. I'm really good at reading price, but risk management is also one of my main edges. It carries me long term, right? So on my evaluations, my management changes since I'm looking to be more aggressive and pass or fail the account quicker. I will admit my model is more effective when implementing the full system here, which I'm talking about funded risk management or live risk management. I want to risk less. I like to risk less. However, there's a very simple plan I follow to get to the evaluation phase. Risk 0.5% per trade. This is me. I'm not telling you to do it. This is me. But allow me to explain why. Let's forget these words and let's just talk, all right? Evals, 0.5%. The profit target is what, 4? Honestly, I don't remember. You got to make, I think it's 4% or 3%. I don't even know. I'm risking 0.5. I think it's 3% you got to make. So I could pass no, it's not 4%, is it? Because 0.5%, hold on. Let me do some math. So on a 50K, let's say on a 100K, you got to make, so it's 6%. It's 6%. All right. We got it. It's 6%. So if I were to take 6 RR trades, so 6 2R trades, I would pass in a streak, right? But the idea here is very simple. I'm not comfortable losing 1% per trade, even on an eval, because it puts me on tilt. It's losing too much. When I lose too much, I know myself. I feel the need to make it back. I can't let go. So what's my solution? Risk less. If I want bigger winners, well, I got to take better trades that allow me to scale in and let my winners be big. That's why I like to risk less originally and scale into my trades or add more into my trades where it makes sense. So I will risk 0.5%. Now, let's say I hit a 2R trade. That's still 1%. That's not bad. I just got to do that 5 more times, right? Before I pass the account. So I can still pass in 1 week or 2 weeks. And if I scale into the trade, I can easily get a 2% or 3% gain. Let's say I go in with 0.5 and then, it goes to 1R. I chill my stop and I add another 0.5. Now the trail is the TP is gonna be around 1 to 3%, and we can still pass in 1 or 2 weeks, right? The key here is ensuring higher probability setups. You can't do this every single day, 2 times a day. You're probably gonna blow the account. But that's how I do evals. Let's talk about funded, which is where my real edge comes in. In my opinion, it's consistency. I risk 0.25%. This is probably the lowest I would recommend anyone to risk. So on a 50K funded, I would risk $125 per trade around. So we're obviously going to range between 100 and 150. Maybe if it's a little bit more conviction, I'll go closer to 150 if I want to be that specific. But for the most part, it's 125. Very comfortable number, right? Am I ever really at risk of blowing the account? Not really, unless I take an early payout. or if I go on tilt and overtrade, or I do something stupid like trade minis, which somehow always happens, even though, you know, it just happens. It just always happens when you start using that order panel or whatever. It happens. That's why you set a personal daily loss limit. But I risk 0.25%. So let's just go here and consider how many trades I would have to lose in a row before blowing the account. Now, why do I risk this little? And I'll explain. So if you have a 3% drawdown on the account, so 3% drawdown, risk 4, 3, you'd have to lose, what is that, 12 trades in a row? And I don't think I'm doing that right. It might be more. It might be a 4%. It's 4% drawdown, right? It's 4%. So you would have to lose 16 trades in a row. I'm just going to double check here. So 16 trades in a row. You'd have to lose 16 in a row. I have never lost even 10 in a row, let alone 16, right? Now, what's the reason of risking so little per trade? For starters, it allows me to take multiple trades per day. Sometimes my model fails and I want to re-enter the trade, and that happens, right? Not every day the first one's going to play out. If I risk more, it's hard to trade with more risk, right? If I risk, let's say, 0.5% and I lose 2 trades in one day, well, I'm down 1%. That's 25% of my account. There are many days I lose 2 trades in a row, so I'm not comfortable with that. I know myself. Now, maybe you don't lose 2 trades in a row in the same day. Maybe you only take 1 trade, so you don't have to implement something like this. I'm talking about myself here. Sometimes I lose 2 trades in a row. Sometimes I lose 3 trades in a row in the same day. Now, usually I won't lose 0.25, in one day 3 times, but the most part, the idea is the same, right? I can take multiple trades per day. That's 1. 2, remember, I can always scale into my positions. So if I'm worried about not making the winning day minimum or whatever, I can always scale in and eventually it'll add up. I'm also never under the pressure here. Now, when I lose, say you take a trade, you have $2,000, you lost 125. Are you going to sweat? Are you going to think the account's done? Are you going to think, oh man, like I'm worried that I'm not going to I have to make this back right now? It's 125. Your account's fine. This account is a survivor, You don't have to worry. Now, maybe you have full control and that doesn't affect you. I'm talking about me here. It does affect me. If I were to lose 1% in one day, or let's say, 2% in a week or whatever it may be, if I go on a losing streak, first of all, you can't afford going on tilt. If you go on tilt and you overtrade with 1% risk or 0.5% risk, your account's going to blow within 1 week probably, right? You can't afford that. With 0.25, you can still afford going on tilt. And when I say going on tilt, I don't mean overtrading and blowing your account in one day. I'm talking about like a lose streak where you're not able to view the market clearly. Maybe you're a little bit unconfident with the model and you realize you have to take a step back, but it's too late if you risk too much. There's no time to take that realization that, okay, you know what, this is a losing streak and I'm not viewing it right. You can't do that if you're risking 0.5 or 1. Your account's already 75% gone. And at that point, you're probably just going to feel like giving up. But when you risk 0.25, man, I could lose 4 trades in a row. And I still have, most of my account. And that's assuming no risk reduction, which again, I always reduce my risk on my protraction model. And sometimes I scale in as well. So it's a really good number for me. I can still often find myself getting 0.5% easily on a trade. And in good trades, even making 1% or more. Because I can scale in. So this is where you just have to know about yourself and what you're comfortable with. Now, the final part of this is journaling. The only reason I was able to make this video was because I have been journaling. I have been showing up every day, taking note of my experiences, my strengths, my weaknesses, what puts me on tilt, because tilt's going to happen. What puts me on tilt, what makes me trade better, what allows me to take full advantage. When I'm not worried about how much I'm going to lose, I'm able to trade better. So when I lower my risk, my win rate goes up because I am simply trading better, right? And that's just the reality of it. So you need to know what works for you. You only do this by trading. Take whatever you want from this system, and I hope it's somewhat beneficial to you. Journaling is what made me able to make this video. Because without journaling, I wouldn't have learned those stuff about me. This is what I look to journal. So I journal whether it's an eval or funded account. I journal the status of that account, whether it's blown in progress or completed. That way I can at least go back and see my results. Now this is a newly template I just formed. The result of the trade, you know what? Let me just pull up the exact. Let me just pull up the journal here for you guys straight up. So, for example, let's say we took a trade on an eval, and let's say it was a win or break even, or let's just say partial loss. I'll put the satisfaction of that trade. Let's say I'm 7.5 on the day. Net P&L, said partial loss, let's say minus 50. Trade breakdown, whatever amount of trades I took, I'll break them down like that, 1, 2, 3. So I'll put the net P&L. The PO3 model for 930, these are my 3 models. Now if I say none, that means either I didn't follow the model or it's no trade. And then in the daily power of 3 model, I take a picture and I put my, remember that daily outlook that, before we even got into the models, I'm going to copy paste that in here. Same thing for the week. So I do that daily outlook every single time. And I put the daily chart that includes with the daily outlook, the weekly chart that includes with the weekly outlook, the trade execution, and then the most important parts, the reflection. This is where I put a big paragraph reflecting on any lessons, emotions, how I felt, anything bad I did, anything good I did. You don't want to congratulate yourself too hard, but if you do something good, it's good to take notes. And you don't want to bash yourself too hard because it's going to happen again. And you don't want to just beat down on yourself every single time. But reflecting is important. So if you want that template, you can send me a message on Discord and I will send it to you. I have no problem sharing the template with anyone. And yeah, man, this is pretty much my entire trading system. I hope you guys learned something beneficial from this video. Hopefully take some inspiration to write down your own trading system. Maybe you can use the same components. For example, how you determine bias, your actual model, how do you go about your entries, your stop loss, your take profits, confluences that you look for, maybe your risk management plan, money management, how you want to journal, your rules, right? There is one thing I think I didn't include, which is my maximum loss. So 0.5%. So if my risk is 0.25, 0.5 is my max. So if I take a trade in 0.25 and I lose 0.25, I take another one and I lose like 0.1, I can take another trade. The max I want to lose per day is 2R. That's the simple rule. I don't want to lose more than 2R in one day. If I lose more than 2R, it's fine. I can walk away. When I lose more than 2R, I'm on edge for the day a little bit. Now, honestly, I made this rule a long time ago, and ever since then, I haven't really been on edge after losing because I've been implementing it for so long. But I implemented this because in the past, when I would lose more than 2R, let's say I lost 3R or 4R, I would be on tilt. I would be grumpy the entire day. It would ruin my day. Trading would take control of my day, and the day would suck, right? But when I lose 2R, it's only 0.5%. I'm chilling. I can easily trade tomorrow, the day after, the day after, and the day after, and eventually it'll be fine. It'll work out. Now, obviously, you can still blow an account if you go on tilt. It's not going to be perfect. There's no perfect number when it comes to prop firms. It's not like you can, risk 1% of 50K. You can't. You only have the 2,000 drawdown or whatever, the 6,000 drawdown. But that's how it is with prop firms. I hope this video was somewhat insightful. I hope you guys can take away something, inspire you guys to maybe journal or write down your model, write down everything, draw it out. Stay organized, stay disciplined, stay consistent. And I'm looking forward to seeing you guys in the live streams. Take care. Peace.